In today's video, I have a bit of a virus update for you, a look at Qantas, and having a look at what the IMF has said about the global economy. Hello and welcome to another ACY Securities Market Update. My name is Alistair Schultz and I'm going to be your host for today's trading journey. The first thing to cover today is about Qantas. Qantas has had another setback for themselves. They're talking about reducing the amount of staff they have by 6,000 or nearly 20% of their current workforce. And earlier in the year, they laid off about 30,000 employees back then. They still have a number of people that are being furloughed and receiving government benefits. However, it's a very stark difference compared to what they were doing at the beginning of the year, where they were looking at getting more planes, offering more flights. Now, under the circumstances of COVID-19, they've been reduced to very little much more. They are seeking to raise $1.9 billion, which will hopefully get them through the next 2 or 3 years before starting operations of flights again in full capacity. But again, they are still concerned about that and whether it's going to actually continue. Global airlines are already expected to lose about $80 billion this year in terms of lost revenue. So we can expect to see this continue, especially with these new waves of COVID-19 starting to run rampant across the globe. Now, the next one that goes into today is on the IMF, the International Monetary Fund, or the central bank of the central banks. Now, they have downgraded their global outlook for the entire economy in the last 24 hours with a recent report. That report has said that they are expecting GDP to contract even further, down to up to 4.9% contraction occurring from the initial 3% that they had originally forecasted back in April. Now, from there, they're also expecting for 2021 to only have growth of about 5.4%, and that's if we're lucky. Prior to that, they were expecting it to be 5.8 back in April, but naturally they have readjusted their forecasts. Now, so far, they're expecting a $12.5 trillion loss for the global economy this year. They are some very big numbers to be dealing with. And to have a look at the idea of what the global debt ratio is, they're looking at it to exceed 100% before the end of this year. So again, very concerning statistics, and we'll have a look at how some countries are dealing with the global debt side of things in a moment. Now, the other side of this is that they've already said that 2020, in terms of economic fallout, is likely to dwarf what we saw in the 2008-2009 financial crisis. So certainly something to consider on the real world impact of what is going on. Now, naturally, stimulus has been counteracting a lot of these measures, but unfortunately it's not going to last forever. Now, having a look at what's going on with COVID-19, we have had a number of outbreaks occurring in the past week with some serious concern. Currently, cases are above 9.3 million. We have nearly 500,000 deaths so far. And the expectation is for the US that they will have 180,000 deaths in the USA by October. Now, that's a very big number to have in comparison to what we've seen across the rest of the globe. But regardless of this figure, the daily infection rates in Florida, California, and Texas are at record highs, even higher than the initial wave of COVID-19 that we saw. And there has now been more than 30,000 cases again reported overnight. So we've got further issues again, and this is what we went into lockdown for, was to try and help the hospital system. Houston has reported that their ICU units are at 97% capacity. So this is flooding the hospital system, and there is going to be further issues with it. And it's not just going to be people with COVID-19 that actually die from this. There will be people that would otherwise have lived quite healthily because of the hospital system overload. They may not get seen. Now, from there, we've seen Germany with 700 cases. We've had Tokyo with another 55 cases. And the UK is now preparing for a second wave, even though they've only just exited the lockdowns. Now, we've also had here in Australia, Victoria has called in the military to try and help contain and do some acting on the side of testing for COVID-19. So we will be seeing more information about that over the coming days. Hopefully it means we don't get borders closed, or in some cases we might hope that it does get closed so that we can contain that infection to one state here in Australia. But we won't know until the next coming days. Now, from there, we've also, when I was talking about the debt ratios and things like that, Canada has noticed this. They've looked at the idea of their budget deficit and that they've got a bit of a problem there. So what they're looking to do now is, with all the stimulus, they're going to try and start issuing or looking to switch or transfer some of these short-term debt into longer term debt so that they have longer maturities on these things, which enables them to have more time to really think about how to handle the debt that they're going to have. Now, they are saying the amount of bonds that are being issued has a concern, and that there is certainly a level of bubbling debt margin that they're worried about. So this is their way of combating it. There'll be more information coming out towards this, but we'll have to wait and see. We'll likely hear some more from the Bank of Canada in the coming days about how they are planning to tackle the rising debt. Now, something for you all to have a think about. The S&P 500 last night dropped 2.6%. Now, that has all been on relation to what's happened with the COVID side of things. So US equities are down. We have already seen Australian equities and European equities and Asian equities all starting to go down with them. I'm expecting today that there will likely be a little bit more on that move down, especially moving into the Australian and the Asian sort of session later this afternoon. So do expect to see some negative results today. Now, that is definitely going to be on the cards. If it does go up, it will likely be stimulus driven, but right now there's no planned stimulus announcements that I know of. Now, moving forward to the news ahead of today. We have a bank holiday today, and tomorrow will be a bank holiday as well, both of them for China. We've also got ECB monetary policy minutes coming out. So whilst we've already seen the reports and all that sort of thing, this will just be about the accounts that they've had there. We've got US durable goods orders, US GDP, and of course US unemployment claims. So there will be a bit of news later on in the session tonight, but for the meantime, be safe with your trading. Now, if there's anything from today's video, perhaps some of the other videos I've covered you'd like to get in contact with me about, it might be a question, a message, whatever it may be, please feel free to shoot me an email at talktoal@acy.com. And of course, like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.